Welcome to another market open forecast video. This one's for the first week of June. For those who haven't seen one of these videos before, what we're going to do is just review pound yen pair. We're going to start on the monthly time frame, work our way right down to the 1 hour, and at the end of the video we're going to put what we see on each time frame into a nice little table and basically determine a bias for the week ahead. So as always, I just want to mention the disclaimer: we are just a community of individuals learning how to trade the forex markets. Anything we say shouldn't be taken as financial advice. Straight away on the monthly then, I'm going to draw a fib here from this high right down to this low. This is sort of the 2008 crash, 2007, 2008. I can draw another fib then from this high to this low. This is the Brexit crash, and then if we zoom in here, we've got the COVID crash here. So even though these fibs might seem irrelevant because these things were so long ago, we're still seeing reactions of interesting areas. The first one that sticks out to me is this area here. The reason that's interesting is because we've just created a support on that level. And the second one that sticks out to me is this 50% level here, which is kind of a future resistance, which we'll talk about throughout the Outlook video. So what I'm going to do now is delete these fibs because I know it gets messy when you start drawing fibs, and I'm going to adjust these zones. So what I'm going to do is bring this one down and up, and bring this one down as well. It doesn't need to be so big. So these are kind of the regions that I'm seeing on the monthly time frame. Okay, so all I've done down here on the weekly now is adjust those two big zones that we had on the monthly, and I've added two other zones in. So what these zones actually are is, if we go through them one by one, we've got one down here at 150. So we're seeing all the reactions here, rejections even, of 150. This zone marks how we broke that level, created a support off it. The one just above is a zone at 153, so now we've broken 153 as we know. Did a little retest here with this weekly candle and then surged up a little bit higher with the last week of May, that candle. We've headed now for 156, but we're still not above this resistance. Not until we're up above this wick and closing kind of above this wick are we actually breaking that 156, 157 resistance. Once we do break that though, it's pretty clean. It's a pretty clean path right up into the 160s. So yeah, it's kind of these four zones that I'm seeing on the weekly time frame. I can zoom in here, adjust these if I like, but I'm actually going to do that now down on the daily. Okay, down on the daily, the first thing I'm going to do is delete this one at 162. I can just keep that level in my mind. Now I can really zoom in on this area and kind of get familiar with this area. So I'm actually going to delete these just because it's easier to redraw some, remembering where those three levels are. The middle one was kind of here, and we can see that in the candle bodies and wicks as well. The other one was up at sort of 156, 157, like we said. So we can bring that up. Bring that up to about there. And the bottom one was just off this general region. I'm not sure if we need this bottom one anymore, because what we're going to do is talk about the trend here. So the first thing I can do is draw kind of this trend line. It's not the best trend line to have on your chart, but it's still showing those higher lows. And what I want to mention here is how we're kind of increasing our gradient here on the trend. So this is nice to see when you're trading the trend. It's just monitoring how that trend is changing over time. So the gradient of the trend now on this daily time frame is increasing, indicating that more buyers are stepping into this market. So we're down on the 4 hour already, and now we can just talk about market structure a little bit. So something we did last week is we drew these rotated rectangles based on the market structure. We have this bullish impulsive move here, which we've come to sort of call phase one. Then a pause of that impulsive move, buyer's exhaustion and a bit of an order block. We call that phase two. Continuation to phase one, buyers step back in after the break, and continuation, return to phase two, sorry. So after that return to phase two, we are anticipating a return to phase one. Very simple, oversimplified explanation of how a trend works. So we did get that return to phase one eventually. You can go back and watch last week's call and see how we anticipated this move. It brought many opportunities for small buying trades or swing trades. But as you all know, we sort of go for those 10 pip intraday trades. So yeah, great opportunities for buys here, but now we've kind of made that high at 156. More than likely we'll see a bit of a pullback from 156 now, maybe a return to phase 2, the creation of kind of a higher low again on this level, and then a continuation with the trend. That's kind of what we're anticipating here. What I can do is just bring some of these rotated rectangles back and draw my level where I'm kind of expecting a retest. It's kind of an obvious place to expect a retest. We've broken that level. More than likely we'll need to pull back a little bit. I can zoom in here as well and just analyze the fib just to see if that fib level kind of lines up with the bullish move. And there you see sort of the 50 and the 618 region lining up with my rectangle there, which is kind of the area that we want to come back down and create a support at. So finally on the 1 hour, just to sort of summarize what we'll be looking for with this path tool here, is a pullback to this kind of 155 or 154 500 region, a support to be created up there, and then the break of that level there at 156, a pullback to that level, and a support to be made there, and then the continue up into those 160s, hopefully in June, if not in July or beyond. Or obviously the trend can be broken and we kind of come back into this range and maybe even break below, but more than likely we're expecting a pullback to 155, a support to be made there. This is the first opportunity for trades, buys off this support. Second opportunity will be on the breakout, and then third opportunity as we head into the new month will be on the retest of that level as well. So that's kind of what we're anticipating here for pound yen as we head into June. So in summary, we've got a bullish trend on all time frames. The only problem is a bearish candle on the daily time frame, but we're not too worried about that as we are anticipating a bit of a pullback as we've just mentioned. So in conclusion, our bias on the pound will be bullish.